Sanjiv, hi, good morning. Good to have you on the show. Sanjiv, let's start off with Paytm. I know you've been holding the stock and I know you think it'll all, find its way eventually. But curious to know whether in the recent decline you've added any positions.
Yeah, good morning. No, Aisha, we've desisted from that. In fact, we've added our position in PB Fintech. Like I told you, PB Fintech, Paytm, and Zomato we hold in, in likewise quantity, and the other two have outperformed, and this one has underperformed. So we'll wait for more color. As you are aware, there are a lot of, foreign institution investors, and the clarity has not been so forthcoming. So we are aware of the downside in the sense that most of the negative news is getting priced in and people who had to exit. But let's wait for more color. The management sounds very optimistic that they have been able to retain a lot of the positives from the RBI FNCO. And from what I learned, that the ED has found nothing untoward towards anything to do with FEMA or what we call Hawala or something like that. So I think it is better to wait for more color. Paytm, the QR, the soundbox, all those are as good as they've been before, and we'll wait for more language. But we will not enter. It's not worth putting good money after bad till you get more clarity. So we are desisting from adding any position. We'll wait for more clarity and then only take a call on that.
Okay, makes sense. That's the call coming in on Paytm. Also, a nice move, Sanjeev, on Friday in some of the smaller pharma names led by Ipca Laboratories, Glenmark, Biocon, of course, as well, held out very nicely. Anything within pharma which is a buy call?
Well, we've had Ipca and Glenmark from much lower levels, close to 550 on Glenmark and close to 820 on Ipca. We still think that that is a very sweet spot, as are the mid-cap IT plays. But, I think the earnings have been supportive of their growth. And this was a misnomer that after COVID, they will be downsizing. I think pharma has been one of the best indices along with IT. And I think now it's the turn of metals to start roaring as China comes back. So as a disclosure, both Glenmark and Ipca are in our portfolio along with Dr. Reddy and Cipla. And Lupin has been our dark horse, which are almost doubled and still looking good. So I will go with Lupin as my top play in pharma.
Okay, Sanjeev, hi, morning. Wanted to get in your take on MCX as well. UBS upping the target price and saying that at 40 times the valuation is justified because the growth part looks strong. Your view on how things have unfolded for MCX?
Yeah, good morning. So Avan, MCX was very, very sweetly placed at that 1800. At 3400, it is 3500, it is more than doubled. But see, 5 themes are there for the next 20 years. Exchanges, depository, stockbrokers, as in where I come from, insurance and AMCs. I think this business is irreversible. And as you see the premium on the NSE also start to be slightly on the upper side on the unlisted space. I think the best play here is MCX. We have a contra call and a buy on IEX, and we think that people are ignoring the woods for the trees. They are missing the woods for the trees. IEX is having 85% EBITDA on its turnover on the margins, and what will happen? There may be plateauing of the rates, but the volumes in the next 3-5 years will be 10 times what we have seen. So I think IEX is a dark horse on the exchange, and power exchanges are here to stay. So MCX, like we said, is in our portfolio, but IEX is something where we have put a lot of money around that 120, 125. We think this is a doubler in the next 1.5 years.
Okay, fair enough. Looking at IEX, giving a thumbs up on that stock. Just wanted to get in your take as well on the entire cap goods space. Just today, there's a Citi report on Cummins as well, where they're increasing the target price. If you had to cherry pick, Sanjeev, especially with this overall capex thrust, manufacturing boost, etc., where is it that you would be placing your bets?
So 5 stocks which we've been very, very bullish and which we own: ABB, Siemens, L&T, Cummins, and Thermax. We are very bullish on all those 5 names. And, you can do your picks and chooses. These are not cheap stocks. They've been hitting new highs, but it's telling you the underlying effect of capex coming after 20 years, where these companies are now cash generating like never before. Also, most of them, like Cummins, ABB, have no need of debt. And that's why the return on capital is, they are expensive stocks, but will continue to remain on that basket. So buy a basket of these 5 or buy some mutual fund which has exposure more towards capital good stocks, because individual stocks may or may not make it to your desired levels of profits.
Sure. Okay, let's
Comment on some of the data that was just flagged off by Anisha with respect to, the impact on MTAR Tech?
No, we have stopped tracking the stock. With that stock went out of our realm and it came down for reasons when the promoter sold. We bought some of it and we encashed. Avan, we want to stay with large caps. So in large caps, we continue to be overweight on HCL Tech. Tech Mahindra is another stock which I think can outperform, and Persistent and Coforge are 4 of these stocks which we are very bullish. Look, IT is been a star performer along with the pharma, and I think they will continue. But look for good names. Tech Mahindra has undergone what it had to in the BFSI space. They are seeing a lot of traction. The new change in management is very, very optimistic. I mean, they are now aggressive in their forthcoming bids, and I think Tech Mahindra can be a relative dark horse. Plus, we want to be in heavyweight. So HCL Tech, Tech Mahindra, Persistent, and Coforge are 4 stocks we would recommend. MTAR is not something which we are very gung-ho over. After the recent run-up, we think there should be some, plateauing over there for some time.
Okay, that's the take coming in on what to pick out for, and technology continues to be a favorite with Sanjiv. And Sanjiv, have to discuss PSUs and have to get your top 3 ideas from there where you still think there's value on the table. I know you flagged off power as a sector already, but aside of that.
So Aisha, first we'll go back a month back when 3200 was, or 3300 was where 3700 was where Hero Motor was, and there was a downgrade to 33 or something, and I said 5000 is coming in Hero Motor. By the way, we hit 5000. On 14,000, I gave 25,000 as a target for Bosch, and people were laughing. In fact, it hit 28,000. So don't underestimate the power of a bull market in stocks and sectors which have not performed. Similar is the case with State Bank, Can Bank, PNB. 40 rupees is 130 and raring to go. And REC, PFC, every quarter the numbers justify the re-rating of the stocks. I am not advocating a full-fledged buy, but I still think there is room over there on certain stock sectors which can outperform. So do your whole homework. I still think in the large cap, NTPC is a stock which you must own. Now, whether you buy it at this price or slightly lower, it's all up to you. And like I said, Aisha, the comeback in commodities is now going to be a play on China. I would be very, very bullish on metals. And Tata Power continues to be one of the best picks over there, but on declines.
Mr. Sanjiv Bhasin, as always, joins us on the show. Mr. Bhasin, I wanted to begin by asking you about Zee Entertainment, and that stock continues to entertain, right? This morning, again, there are reports coming in which suggest that the merger talks are back on the table, and probably we'll hear more updates in the next 24 to 48 hours. What should one do, whether an investor or a trader?
Very good morning to you, Anisha. Lovely news you've broken out, and even I have been smiling cheek to cheek, and hopefully being paid out for both Paytm and Zee being contrarian. We hold both the stocks, and we told you, you cannot get entertainment in India of the size of Zee at 14,000 crore. I think there will be a huge breakthrough, and if it does become an MNC, then, God willing, 350, 400, 500, anything is on the cards. All you have to do is go through this next 48 hours. I'm very, very positive. I think there is whatever the differences are, both the parties are sitting down. We will leave it up to that. But like I told you, you were seeing that there was accumulation from smart money. And I think it's a throwaway price, 180. So please, if you are seeing and you are waiting for the news, go ahead and take a call, buy some stocks now. And I think that you'll be richly rewarded. If this MNC play goes off, Anisha, it will be a game changer for the media space. And I think Sony's presence will be very, very well advocated in the stock price and the results forthcoming from it. So as a disclosure, Zee is in our portfolio, and it's been a little painful, but I think after pain, gain is going to be there very much on the cards.
Oh, yes, indeed. Now with Z and Sony huddling right back again to salvage the merger, the talks have been revived. We'll just have to see how this epic drama, I think, really plays out. But let's also get in your thoughts then on the Kotak Bank rejig that we've seen. How is it that you're reading into all of these developments, what it could potentially mean for Kotak Mahindra?
So, Avan, clearly Kotak has been one large cap bank which has disappointed. We were optimistic given that they are in all businesses which are doing exceedingly well. And I think this the lacuna after Uday Kotak's exit has left unnecessarily pessimism. The results, the numbers, the net interest income, margins all seem very, very steady. They've been one of the best profile as far as lowest NPAs. I think the reject should do well. Also, Avan, as a disclosure, we think that private banks now are in a much better space to grow rather than some of the PSUs. So take some money off the PSUs. We are not saying totally exit, but get into some of the quality large cap private banks. And that includes HDFC Bank, by the way, which clearly clarified that they are not going to give in to lower NIMs just for the sake of deposits. There will be a gradual incline, and at 2-time price to book, I think HDFC Bank now seems the large cap which can move. We are optimistic on all three: HDFC, ICICI, and Kotak.
Okay, positive on all of these private banking names, clearly value on the table. But
Ji sir, good morning, and this is Vinny joining in as well. What I want to talk about is GCPL as well. The numbers have been good this time. They've outperformed in terms of the FMCG pack. Now, yesterday they came in with an announcement in terms of the reorganization of the East Africa business and the divestment there. How are you looking at GCPL overall in the FMCG pack? Do you think, given that the strong earnings are going on, focus on, leveraging and moving towards better profitability is something that could work out well for them?
Yeah, good morning, Vinny. So actually, from the last 2 years, this has been one of our top picks, and it has outperformed the FMCG basket. We've been close to 650, 670, and we were recommending very strongly that their Malaysian, Indonesian market growth will be in high double digits, and that is how it has played out. I think that they are focusing well on a lot of models abroad, and given the franchise which they have, I think they have a huge market share to gain over there. Yes, there will be a little bit of EBITDA loss because of expansion, but I think the brand is very well enriched. I would not give a buy here. As an alternate, I think Dabur fits the bill perfectly. This stock has not done much. The management is very, very optimistic, and I would rather take some money off Godrej Consumer and add into Dabur. Both these stocks are in our portfolio. We have booked profit in Godrej Consumer, but we are now more bullish on Dabur as a FMCG play. Also, we think FMCG now will start to rear up as rural incomes go. You cannot just have motorcycle do well. I think the other basket of staples is here now to perform. So Dabur would be my top pick over here in the FMCG basket.
Okay, fair enough. Meantime, let's also get in your take then on Coal India, Sanjeev. What is your outlook given that now a lot of brokerages have come out with their view on Coal India, saying that valuations are fair but dividend yield still remains a little bit elevated? How are you looking at the news with respect to the drop in the e-auction premium?
So, Avan, it's difficult to call a stock which has been a multi-bagger from 220, it has gone to 450. Don't chase it. All the dividend yield, good news is in the price. The best of the earnings are priced in. Thermal capacity is also very well priced in as far as power goes. I would take some chips off the block in a large part of the PSU basket and try and get into other names. Like I told you, private banks, insurance, SBI Life is something which is our top pick. We like Dabur and a whole host and Z. Why not take a little bit? So I think this is a good time to take some money off the PSUs. You will be leaving maybe 5-10% off the cuff, but you are encashing some of the large gains which these companies have had. They are large commodity players, and yesterday they did sound that their output is now on a decline, which I think should see some amount of consolidation, if not correction, in the near term.
Meantime, Sanjeev, let's also get in your thoughts on the entire domestic tourism boost, how you look at that really benefiting companies and the entire travel sector as a whole. What do you like?
So we've liked Indigo, we've liked Indian hotels and the entertainment side. We like Ashok Leland, which is the largest bus carrier as a corollary to that. But you are seeing across the board, apps which do the bookings, the other conduits of that, Ease My Trip, Make My Trip, all those do extremely well. Large part of that is built in the price. There are no free lunches. Ashok Leland would still be my top pick. But Avan, I want to stress one point. There is always this provincial overhang of over ownership of stock, maybe like an HDFC. But once you see clarity on numbers, you see clarity on the management and the guidance where they are not ready to sacrifice NIMs and margins, and the profitability still remains on a steady wicket. They've also guided on the LDR ratio, which over a period of time will decrease. I think this is a quality time where you want to be in less of the riskier areas and in steadier businesses like HDFC, which may not do very much for the next 1 or 2 quarters. But then you never get in 10 years an opportunity to buy 2 times price to book the fifth largest bank in the world. So I would be very, very steady on SBI Life, HDFC Bank, Dabur, and say Z. These are 4 or 5 names which are pedigree in their names. The broader market is looking overbought and little frothy. Be watchful over there.
Let's just check in as to what were some of the movers in yesterday's trade, and you had a lot of support coming in from some of the heavyweights as well, the likes of a Reliance Industries. You also had ICICI Bank, which performed, and there's some positive brokerage views as well on a Reliance Industries. Do you believe that, Sanjiv, it is going to be some of the large caps that will lead the way going into the next leg of the up move, if at all we were to see that play out after maybe a phase of consolidation?
Yes, Avan, and clearly Reliance has been at the forefront along with maybe a TCS and I think now it's about time HDFC Bank added weight to the Bank Nifty. I think Bank Nifty's earnings, the Bank Nifty support, the Bank Nifty's underperformance should be coming to an head. If we get past this 46,500, 47,000, then I think Bank Nifty will lead the way. It is now the time for HDFC Bank to give support to the market. Both HDFC and Reliance, as you are aware, they have a large weightage on both the Nifty and the Bank Nifty. And these are the two stocks actually which we are very, very confident of outperforming.
Point taken. So those are the stocks that you're quite positive that will outperform. Just addressing the news flow on Tourism Finance Corporation, seems like a large block deal has happened on that one. Almost 13% equity has actually changed hands. It's a fairly liquid counter in any case. So seems like there has been a bit of a block which is coming from a few consortiums together, because I can't see any single holder having 13% stake. So we'll wait by and see what exactly has happened there. But in terms of the other news makers, yesterday's PB FinTech move was quite interesting, given that gain of almost 9 to 10% on account of the composite insurance license that they got. Mr. Bhasin, I know your view on Paytm, but what's the view on PB FinTech, even delivery for that matter?
So, Anisha, we hold all three in equal quantity, slightly more on PB FinTech and Zomato because of the gains. And we intend to hold that basket. Paytm, as you know, has been an underperformer. So we are waiting for some more color on that. Maybe the burst is priced in, but it will take some time before you digest all the news flow and the weak hands move out. PB FinTech is one of our star performers. But at 1,000, we will not chase it. We will just be with it. I would also like to comment on one more news item which people may have missed. Vedanta is looking to sell some of its steel business which it acquired about 8 years back, and that is now going to be sold at a substantial premium. The talks on the paper are that one of the ex-ArcelorMittal person is buying it in a fund, and you know that Vedanta's underperformance is there because of the huge debt overhang. I am of the view that in the metal basket, Vedanta is a dark horse which can be a huge outperformer given its presence in all businesses from oil, gas, thermal power, and the other commodity basket, including silver, platinum, zinc, aluminum, and copper. And if this news flow is good and the debt is reduced, then this stock can be re-rated on the upside. As a disclosure, Vedanta is something which we are accumulating, and we are very, very optimistic on the metal cycle.
Autos as a pack has been doing really well. Mr. Bhasin, what's your view on that, and where does the preference lie? Two-wheelers, four-wheelers, within that as well? Tell us your top bets.
Maruti, Bosch, all doublers. I still think there is more steam, Tata Motors, and my underperformer Ashok Leland. I would still put money on Ashok Leland given the ascent into all businesses. The bus market is growing rapidly. They are 53% market share in the bus market, third largest in the world. And I continue to be overweight Maruti. I had given a target from 8,000 at 12,000, and little did we know it will be there very, very soon. Same is the case with Bosch. 25 has now become 29,000. 32,000 is very much on the cards. The underperformer or the outperformer or the underperformer has been Ashok Leland, which I think can catch up. And Hero Moto also one of my top favorites at 5,000. There are no free lunches now, Anisha. So do your stock pickings. As a disclosure, these have been in our portfolio from some time and relatively outperforming. But we think auto and real estate are something where you should take some chips off the block.
Mr. Sanjiv Bhasin is also joining us to talk to us about his stock ideas, because that's something that has always been making you good money. Mr. Bhasin, I'll come to those stock ideas, but before that, I wanted to begin by discussing what's happening at Hindalco Novelis. What's your take on the recent news flow about Novelis looking at perhaps an IPO in the US?
Yeah, good morning. Anisha, I think it will be the first from the AV group. And if I recall, Novelis was a prime buy in the late 2000s when, Tata's acquired Chorus and there was a big write down. Hindalco was available at 45 rupees after that recent acquisition because of the debt and the overhang. Novelis is a very clean and a very, very prime asset. The aluminium it makes and the type of market it has, I think it should be a very, very big positive for the company. Now, they've also indicated that there will be some more capex which they will be involving. That is why the stock has come lower. But I think it's a good opportunity to buy. Once we know more details on the pricing and the amount, I think there is close to $1 billion which will be raised by the AB group. It could be a long-term positive. And I think I'm extremely positive on commodities as a whole and metals particularly. So we think that this could be a positive news for Hindalco.
Positive news for Hindalco, that's the word coming in from Mr. Bhasin. Surely a one to watch out for there. But what more we are watching out for is the consensus on the trade time extension still eludes. Now, ET now has learned from sources that BSE Brokers Forum has yet not agreed on the proposal for extending market trading hours. Ankur is joining in with us to give us more details on that. Ankur, what's happening on the time extension of trade hours over there?
Yes, unlike what wide anticipation was there, that there is a consensus among brokers for extending the trading hours, what we have learned is that BSE Brokers Forum has yet not given approval for extending the trade time. While on the other hand, you remember that NME had approved the idea of extension of market trading hours, and similarly, another body, CPAI, had given approval. However, we learned that BSE Brokers Forum is yet to discuss the matter in the meeting, and we learned that some of the small brokers are opposing the idea of extension of trading hours. Now, this whole issue is important because Industry Standards Forum, which comprises of BBF, that is BSE Brokers Forum, NME, NSE's Brokers Forum and CPAI, all these together have to submit the views to the market regulator SEBI by month end, and if it is not approved by BSE Brokers Forum yet, it does not look from outside that all the brokers are in favor of extending the trade time hours. Remember, NSE had proposed the idea of extended trading hours in the evening, and that too in F&O segment. However, it has to be approved by the market regulator. Although market regulator has already given a blanket approval for extension of trading hours till 11:30 p.m. However, whenever this is supposed to be implemented, regulator will see how brokers are going to adjust to it, how other market participants are going to adjust to it. So all in all, BSE Brokers Forum has yet not approved the idea yet, and we need to wait and see if at all finally there is a consensus before the views are supposed to be submitted to the market regulator.
Okay, let's wait for that consensus. Widely anticipated this one as well. Which side will it swing? Will we get those extended trading hours or not? Ankur will surely be on top of story and tell you all of that. But Mr. Bhasin, coming back to our conversation about stocks, Devyani International is going to be in focus on account of that 4.5% stake that Yum Brands might offload today. What would be your recommendation in the QSR space?
Yeah, so first, Anisha, a word on the extension of trading hours. Many years back, I used to trade in Hong Kong. Of course, I was trading the South Korean and the Indian market as a from participatory notes for Deutsche Bank, and the Hong Kong market used to close twice for lunch break and one for a general. Even today, the Nikkei closes once. We have apathy. We don't even break for 5 minutes for a lunch break, and we want to keep extension going on for eternity just because the US markets are open. Can you change the geographic factors that the US is 11 and a half hours ahead of us? I think ridiculous. If you don't keep work-life balance, then you will actually lose it. In the end, the volume will be the same, and all you'll do is increase volatility and increase, the pressure on outsiders who will become into this habit of trading in the evening and so on. So I think from my side, it's a big no. Coming on Devyani, that is one of our top picks. You cannot have such a big brand trade at this valuation. It is a very good long-term pick. Yes, this overhang of Yum may be one of the opportunities to buy. So I think at 150, it's a clear go ahead and put your money where your mouth is on Devyani. In the end, other FMCG space we picked up two stocks, and we think these are very attractive as a price performance. One is Bata, and the other is Patanjali. The way rural incomes have moved, and particularly in the two-wheeler sector, I think staples are going to do extremely well. Bata as a brand is now arguably the best in the country, and so is Patanjali gaining more and more market space from the likes of Lever. As a disclosure, both these stocks are in our portfolio. We have added it, and Devyani can make a perfect combination for QSR and FMCG, all three put together.
Right, Mr. Bhasin. There's something interesting that has come in is also that we know for a long time that Grasim Industries has spoken about the paint segment, the capex that they're making on that front as well. So overall in the paint industry, how do you see that moving? Obviously, when you look at Asian Paints, Berger Paints, not much has happened in terms of a stock move for them so far. But now also competition coming in, there's increased competition already there. What's your view on the paint sector and what is it that you like here?
Yeah, right, Vinny. So, Grasim, JSW, they have both ventured into this, and they have synergies in the shape of their businesses being in the same model. It has been a very big positive for Grasim, actually, which has outperformed. But I still think Asian Paints with 53% market share in decorative is an expensive stock and will remain. There is going to be a shift of some portfolios where people will, long-term investors may opt to book and get out. But I still think HDFC Bank, Asian Paints are two stocks which, if you are looking for consolidation, which have not done much in the last 2 years, could be the ones which you must own. You cannot have Asian Paint and MRF are two stocks which have never diluted equity. And I think that if MRF is 1.5 lakh, Asian Paint is also set to go higher as earnings catch up. Now, in the short run, you're right, the competition is there. But these paints are like brands like Muthoot. HDFC Bank will not get the gold loan share as much as Muthoot gets. Same is the case with Asian Paints. Trust, brand, and past performance make it a must-have, and that is what stands out for Asian Paint. So we are bullish rather on Asian Paints. We have both Asian Paint and Grasim in our portfolio.
Mr. Bhasin, I wanted your take about Z as well. Yesterday, that stock was in the upper circuit, that entire news break of perhaps a deal coming back to the table, but now the company has denied it. This morning, there are fresh reports of some $200 million accounting issues that SEBI is investigating. It's becoming a complete roller coaster ride, to say the least.
Yes, like you said, it's a Saas Bahu episode, and you don't know which side of the day or the bed they open up. And rumors all about. I still continue to think once this murkiness is over, if Sony does acquire it, it will be a huge win-win for shareholders, for banks, lending institutions, and for Sony. Now, what comes out of it? These, like you said, every day there is rumor talk of the stock, and the stock is in ban period, and you see extreme moves. I still think the value of the asset at 13,000-14,000 is an extremely attractive business to be in India. But like I said, we will wait for more of this, color on the clarity which has to emerge. Yesterday's paper said that within 48 hours you could hear of a deal. Now, we will wait. We are an investor there, and we will wait. Anisha, on your other point on the brokerage house of downgrade of two-wheelers, one of the ones which you mentioned, he had come down with a downgrade at 3,200 on Hero Moto, and for a target of 23, it went to 5,000. At 5,000 again, you're coming out with a, so you missed the real 30%, and now again you come with a downgrade. Somewhere down the line, the stock will correct. Bajaj Auto from 9,000 can come to 8,000, but you missed the woods for the trees. You had no idea what two-wheelers and the comeback was. So always remember, big names are there, but 99% of the time they are mostly wrong. So when they come out with buys and sells, you have to be a little bit contrarian, as was the FIU in November, where 18% long was there. They were 18% long, 88% short, or 82%. And you've seen where the market has gone. So this market is a retail-driven market, which is maybe overpriced to an extent, but we should focus more on retail rather than some of the big names which have 99% been proven wrong.